Well, the companies that get private credit loans are looking increasingly wobbly, and banks are among those that could eventually be on the hook for losses. Now, many companies, they are getting direct loans from private lenders, and they are struggling to produce cash. But at least one key measure, at the end of 2024, more than 40% of borrowers had negative free cash flow from their businesses. That is according to the IMF, the International Monetary Fund. They warned in a report over the past week. Now, that is up from closer to 25% at the end of 2021. Curious what our next guest has to say about the environment. With us is Stephen Tananbaum, who's founder, managing partner, and chief investment officer of the credit-focused asset management. We're talking about Golden Tree Asset Management. They've got nearly $57 billion in assets under management for institutional investors. So nice to have you here. I know you're leading.
It's great to be here. Yes.
It's loud. Tell us about the environment right now. And I'm curious, where do you see some opportunities when it comes to global credit markets?
So it's hard to believe in just these past 4 weeks, we've done a round trip. So right now, spreads, HYG, which is the ETF, it's pretty much unchanged. Yet the expectations for the economy have shifted down. So right now, the market doesn't seem to believe that there's an issue, but predictions and the environment certainly doesn't reflect that. So
round trip, are we back where we want to be, or are we back at a place that's very different from where we started?
So I think the real issue is this 2022, where the concerns about a recession are overblown, and we're going to play through this. Very much the resilience that Treasury Secretary Besson talked about this morning. Or are we in for something that's more turbulent, and that the expectations that the economy is slowing is actually going to be realized, in which case spreads do not reflect that. And it's developing.
What do spreads reflect right now in your view?
Benign environment.
When you look at how much spreads did increase in early April, along with all the other market ructions around April 2nd and the rollout of those trade and tariff policies, and the narrowing that's occurred since, similar to the rebound that we see in public equity markets here.
Yep.
Is that in sync?
They certainly are complementary. There's been more dispersion in the equity market, and particularly in mid and small cap, than what we've seen in the credit market, which has really been pretty much technically, recovered pretty much to the levels that they were before.
What about valuation? When you're looking around right now and you see what's already on your portfolio, but also new opportunities, do you have some sort of transparent price discovery right now, or are things kind of muddy?
So in terms of the stuff we're doing now, there's always idiosyncratic. I've been a portfolio manager for 35 years. There's always something to do. But in terms of this market, that interesting, there's no FOMO of not participating. But we're going to get more evidence about how things are in the next 4 to 8 weeks. And I'd rather be tighter with more confidence, or believe that the market reflects the uncertainty.
So you don't want excitement, you want boring.
No.
Or something in between.
I'd rather have a lower price with excitement or a higher price with boredom. Yes.
Well said, well said.
Yeah.
Are you looking to do capital raises because you anticipate there's more opportunities to come once things settle down?
So we're pretty good with capital. So we have our catcher's mitt, and also we're pitching some deals. One of the things about this current environment is there's the M&A and some of the asset sales that private equity was expecting isn't coming realized. There's a wider gap between buyers and sellers. So one way to return capital to LPs is through dividend deals. So we want to facilitate that.
I am also curious, we have seen spikes in terms of, credit spreads widening. I think about the last month, the moments of stress here. Do you think that's it for this year?
Yeah.
I mean, the volatility has been immense. And I understand what you're saying, the difference between the public and the private markets. And I'm curious which one is right.
Sure.
At this point.
So I remember during the UBS Credit Suisse, and it lasted for maybe a day. And there was a good reason, because the dynamics of that deal that were onerous to the Credit Suisse junior debt holders,
right,
that you could extrapolate that. And it turned out, because the Swiss regulator is different than the rest of Europe, you could pretty much isolate that. I think it's very different in the U.S. It's still developing. And then there's the tariffs with our allies, and who we have very healthy relationships. and there's the more developing relationship with China that is unclear. So I think that there's two way that, and those are two different discussions, and how they turn out, we're going to see.
We only have about a minute left. I am curious about opportunities outside the U.S., particularly in emerging markets.
Sure.
Of course, I mean, Golden Tree has been a big player in that for years, and we've seen really sustained, meaningful outperformance as of late in emerging market assets relative to developed markets.
Sure. So one of the effects of the tariffs and Trump's perspective, I think that their agenda is to weaken the dollar. To weaken the dollar historically has been good for emerging markets. If you look at what's happened in Latin America, they've had some elections. You've had success in Argentina, very good cooperation out of Mexico. So that's been a place, that region has been much more supportive to investing. And so I feel as a neighborhood, it's been a pretty good neighborhood, and it seems like it has a good tailwind still.
Do you think they'll be successful in tamping down the dollar strength, the government?
Well, I think they like the,
They want, but do you think it's going to happen?
It seemed to be happening.
Yeah.
And it seems to me that it's had a healthy move, and you could say that it's still pretty reasonably priced. So I think, that it makes sense to me where the dollar is.
All right, so you've got to leave it there. We'll let you get back to it. Stephen Tananbaum, founder, managing partner, and CIO over at Golden Tree Asset Management.